G'day traders, welcome to your daily market update for Friday the 22nd of May, the last trading day of the week, and we've seen the Great British Pound enjoy some excellent retail sales figures and the US dollar loses momentum after weaker than expected manufacturing and home sales. So the session was quite exciting, especially for the pound. It was the winner of the session. If I go through yesterday's data, you can see here retail sales smashed expectations across the board. It was a surprising result and it really dominated the European session. The market seems to have put behind it the deflationary data that we did get during the week, and now looking forward, we have kickstart the market's forward-looking expectations on a positive note with this retail sales, and the US dollar was stalling, and that really helped the Great British Pound versus the US dollar push through some major levels and stage quite the rally. We'll have a look at that on the charts in a minute, but the pound is certainly enjoying the price action right now. We did move into the US session, and the market was really looking for some strong US data to continue the momentum that we've seen, as it was testing a resistance level, and we really needed to push through that to be quite confident that a bottom has started to be carved out. However, that wasn't to be. We did see some weaker than expected manufacturing and home sales data, and this led to the stalling of the momentum for the US dollar. And for now, it looks like the disappointing of the data has really capped the US dollar for the time being as we close the week. We did see some speeches from Fed Minister Stanley Fischer and Fed member Williams. However, they were unable to provide any information that the market was going to enjoy. We did see the Bank of Japan's monetary policy statement come out today, and in the Asian session we've seen the statement really relatively unchanged. However, they did provide some encouraging comments. The easing is having the intended effect. Housing investment has bottomed. Private consumption is healthy, and inflation expectations continue to increase with a longer term view. So they look like keeping the stimulus going until they do reach their target of 2% as a longer term goal. However, the outlook does look encouraging if you were to take their words for it, and that has certainly helped the yen during the Asian session. So some comments there of being a positive nature, but now we turn to the European market, with the GDP for Germany is going to come out, and we'll see how that affects the market. That will be the key focus. We do have Draghi's speech coming up later in the session. However, I'm not sure that he will mention anything of particular importance that the market will really be focusing on. However, nonetheless, it's always to keep tabs on all the press releases that are coming out from these key officials, as we are in some turbulent times, and we are really looking for any guidance we can get in terms of the situation with Greece and the EU. Moving into the US session, we do have CPI, and CPI is an important data drop for the US, as it is an indicator for inflation, and inflation is important for the interest rate outlook for the US. So if we do get a surprise to the upside in this report, I'm sure that the US dollar will enjoy. However, if it does disappoint, the market will continue to lose its recent momentum and push lower, I'm sure. Keep an eye out for that data, as it will control how the US dollar closes the week, and I'll be definitely paying close attention. Coming out at the same time, we do have a host of Canadian data, being CPI and retail sales figures. Both data drops are important for the Canadian dollar, and I'm sure that the combination of those and the US dollar, we will see some price action in the US dollar versus the Canadian later on in the US session. We do have some speeches to close out the week. However, I'm not sure that too important information is going to come from those. Nonetheless, as always, keep an eye out on the news wires for the statements and comments, as it may create the tone leading into the open of the Asian session on Monday. Well, that's the data. Let's have a look at the dollar index. And as you can see, we did stall after what has been a pretty impressive rally, and it looks like the US dollar is testing the back of the recent uptrend, and the stall could follow through down to the 94.5 if we do see some weak data coming from the US tonight. And we can't really say that we have found a bottom until we do start making some higher highs, and I really would like the 96 level to be taken out before I get overly excited. However, nonetheless, we need to keep an eye out for the data and any comments from the US officials regarding the interest rate, and we'll be doing just that. And if I move to a 4-hourly chart, it may help you see that we did stall throughout yesterday's session. Looks like it's carrying through into the Asian session. And the next historical support resistance level is 94.5. If it does break below that, I'll be starting to get concerned that momentum has really been sucked out of the US dollar, and it looks like we want to go lower. We'll address that all next week, and until then, let's get over and have a look at the charts. We have the New Zealand dollar here versus the US on the daily chart. You can see that we have had a bounce on the weaker than expected US data, and we are moving our way to test the 74 cent, and 73 cents has been support, and historically so. For now, the bounce could possibly be short-lived. We'll have to keep an eye on the US dollar and New Zealand data later in the week, and 74 cents offers resistance in the short term. The Australian dollar has fallen quite considerably in recent sessions. We are below the uptrend line, and we have taken out some support here at 79 cents. We're now pushed back above it on the weaker than expected data from the US, and if we were to go to the 4-hourly chart, I'll be looking for resistance coming up, testing the back of this trend line before I get too excited. Perhaps that will create resistance for the Australian dollar before it makes its next move lower. The Great British Pound daily, as you can see, the 200-day moving average has offered support, as the 100-day did recently, and it looks like the support here of $1.54.5 has held up, and the market bounced on the back of yesterday's better than expected retail sales figures, and it looks like we want to push through. The pullback also coincided with the Fibonacci 50 level, and we'll be looking at the next resistance level that the market stalled at. Any breaks above that would definitely allow for moves to the upside, and we could continually to move higher. It's all going to be also subject to the US dollar and the interest rate hike outlook for that. The euro is finding support off a historical uptrend line, as you can see here, around the $1.11 mark, now trading above $1.11. $1.12 is the next resistance level, and we will see if the market can break through that before it continues on higher. However, for now, it looks like we are stuck between a range, and yesterday we did form a resistance level just here, and we will see how the trading session prevails. It could be a quiet European session for the euro dollar, but we'll wait and see. The US dollar versus the Canadian dollar will have sparks flying later in the US session, as we do have US data and Canadian data coming out. And for now, you can see that the market is testing historical downtrend line when it did stall, and the US dollar stalled yesterday, adding to some downward pressure there. We also need to note that the US versus the Canadian dollar is heavily correlated to the oil market, and the oil market staged a pretty impressive rally yesterday, but it is stalling, and it is stalling in coincide with the recent lower swing highs that we are seeing. It did break through it, however, we haven't taken out the recent major lower swing high, and we'll see how the oil trades throughout the remaining session. Of course, the Canadian data will have some play in that as well. I'll go back and have a look on the daily time frame, and you can see that we have staged an impressive 3-pattern rising star candle formation, and that could indicate that oil is completed its short-term pullback and ready to move higher. As soon as we start making some higher highs and higher lows, that will have been confirmed, and oil pushing higher would be welcome from the Canadian economy. US dollar versus Japanese yen, we have had a very impressive rally from the US dollar, as I've mentioned, but it is stalling in contrast with the other markets, the pound and other economies outperforming. So we can see here that the comments from the Bank of Japan today also adding to the downward pressure here on the US dollar versus the yen. Overall, if we do zoom out, we are still within the trading range. Yes, we did break out of this consolidation triangle, but we have still been capped by the historical levels, which has contained this sideways range. So for now, it looks like we're going to remain within the range-bound market for the US yen, and we'll have to look for next week and the prospects for an interest rate rise from the US before we potentially see a breakout of this range. Well, that's it from me today. I wish you all the best in trading throughout today's session, and have a fantastic weekend. I'll be back again next week. So until then, trade well.